What's up everybody, this is Investing Sensei here to bring you another video. Hope you're doing great because I'm doing fantastic. Before we get started, I just want to let you guys know that this video is for entertainment purposes only, so I'll leave the full disclaimer in the description below. So the purpose of this video is for me to talk to you guys about my investing strategy. And this was actually a requested video from Rimney. He's one of my newer subscribers. So Rimney, welcome to the channel. Thanks for your great feedback. And if any of my other subscribers would like to see any other type of videos that you guys would like me to talk about, let me know in the comments and I'll be glad to make a video about it. Alright guys, so what I have for the agenda here is, first we'll talk about goals. So what the overall goal that I'm trying to accomplish, alright? And from there, this goal can be reached by a certain strategy that we're going to end up following, right? And this strategy can be broken down into multiple steps. And I've broken them down into it. So I'm going to talk to you guys about M1 finance, how that gets involved into my strategy, continuous investing, compound interest, and then we'll talk to you guys what I plan to do with the next stock market crash and how I'm going to take advantage of that, and then diversification, and then finally YouTube. So let's start with goals. So the goal of this portfolio is for me to reach the 7-figure mark. I want to reach the 1 million. So I want to be called a millionaire at least once. I know I can do it. It just takes hard work and dedication, and I'll eventually accomplish that. So you guys can see here that I have $36,896.04. I want to get this to a 7-figure mark. So this could be capital gain, right? So right now you guys can see overall I've made $4,800.06. Some of that has been $550-ish and just dividends. Everything else has been capital gains, right? So I'm a dividend growth investor, and what I like to do is I like to invest in companies that will pay out dividends to their shareholders, right? So I want to be getting paid dividends monthly, quarterly, right? And continue to reinvest those. But as well, I would also like to get the other portion of it, which is capital appreciation, right? So with the dividend growth strategy, you basically get the best of both worlds. And one example that I can show you guys here is, if I go to holdings, right? I filter over here by gains. If we click on Apple, my average cost here was $152.99, right? So $153, right? I have 10 shares of that. My cost basis was $1,541. This is the actual value now, $2,379. That's $800 in just capital gain, right? That's 54%. That's amazing, right? And on top of that, I'm getting paid dividends on them, right? So Apple's paying me dividends, plus I'm gaining appreciation, which, you know, right now it kind of sucks because I would like to buy some more Apple, but you know, that's the whole purpose of the dividend growth investing. You know, I'm going to be getting paid dividends, and as well I'm going to be gaining a capital appreciation. So yeah, I want to reach the 1 million mark, right, on my portfolio value, but I also want to be able to live off my dividends, right? I want to be able to get to the point where if I don't want to work anymore, I don't have to, because my portfolio will be able to generate enough income, passive income, that I can live off of it, right? I also want to be able to get to that point, you know, where it's like I'm not dependent on a paycheck from work. So that's really my strategy, right? 7-figure mark, and then just being able to live off of dividends. And so that really wraps up the goals, right? So I have a strategy for that, and the first part of that is M1 Finance. And M1 Finance is a free brokerage in the US that you guys can use, available for anybody that's in the US, and it allows you to buy fractional shares. And the way that I am going to be using this is that I get dividends on a monthly, quarterly basis, and if I get like $10 or so, like for example, right now I have $12 to invest, right? These $12 came from Altria, which paid me on October 10th. So I got $12 from Altria. I can go, and if I click on this and I go in the red, these other great companies like 3M that's down 6%, I can go and buy $12 worth of 3M, right? Since I can buy fractional shares, even though 3M, one share of 3M is about $160-ish right now, I can buy $12 worth of 3M, which is amazing because I can lower my cost basis. I don't have to wait and save $160 to just buy one share of 3M. I can just reinvest those $12 and continue to do that over time. And I think that's awesome. I think that's going to help me reach that goal a lot sooner. So that's how I'm going to plan to use M1 Finance, and that's part of my strategy. That's step one. And then let me make sure that I scratch these out so that we know we covered these. So the next thing is continuous investing. Okay, so I have this Google Sheet that allows me to keep track of how much money I've been investing into my portfolio. So if you guys look here on the left, you guys will see the dates, and these are every 2 weeks. So this is bi-weekly. I'm investing about $200, and this is more of every time I get a paycheck. And then over here summarizes the whole total money that I've invested into my portfolio. If you guys look at the right, there's a portfolio value goals, right? So at the very end, you'll see the 1 million, which is the 7-figure mark that I'm trying to reach. I've broken this down into multiple goals that I can try to achieve. So the first one was 25K. I was trying to get my portfolio to that. It's already in the green, meaning I already achieved it. And right now what's in the gray is the 50K. So I'm trying to reach $50,000 worth of my portfolio value. And then after that, it'll be the 100K and so on till I get to the 1 million. But yeah, I'm continually investing, and I would like to invest more than just $200. But I'm preparing for the next stock market crash, and once I have that preparation done, then I'll start investing a lot more money. So that's our continuous investing. So let's talk about compound interest. So I plan to use the power of compound interest to get to that 7-figure mark. And just a quick fun fact, Albert Einstein said that compound interest was the 8th wonder of the world, and I really believe it, because I'll show you guys why. So if you guys actually open up, Google, type in compound interest calculator, you guys can find something like this, but this is a really cool calculator that I found. If you populate these values correctly, it'll show you what you'll have worth of money by the end of that year, right? So our initial investment for us, I'm just going to say $33,000. So $33,000, we're investing about $200 every 2 weeks, so $400 monthly. That makes sense. The stock market typically returns about 7 to 10% on average, and so I'm just going to do the lowest. I'm going to say we got 7%, and then the term is how long we plan to invest, right? So for me, I'm just going to say about 35 years is my goal, and then we just click calculate. And it says we will have $1 million and $40,763. And if we go down here, you guys can see this graph, right? So all the blue is the money that we've been investing, and all the gray is the interest. So all the compounding interest, and you guys can see over time this is going exponentially, right? Which is awesome. And so that's how I plan to use the compound interest. This will get me to that 7-figure mark. So now that I showed you guys that, I want to show you guys my chart as well. So this is my monthly dividend payout, right? So I started investing in January 2019, and so I didn't get paid anything. And then February I got paid about $16, in March $83, and that's when I was still learning. I'm still learning a lot right now, but I just bought companies I didn't know about, right? And I eventually started selling a couple and, organize my portfolio correctly. And so you guys can see in April I got 10, May 51, 65 on June, 42 on July, August 73, September $110. And you guys will see over time this is going to go up and up and up. And this is all just money that companies have paid me in dividends. And so if we look at the quarterly dividend payout, right? So Q1, that's the first 3 months of the year. I got $100 worth of dividends. Then Q2, I got $127, and then Q3 was $225. You guys can see that this is going up. So Q4, we should see this higher than $225, and then the next Q1 of the next year should be higher than Q4 of 2019. And that's how you guys can, as you guys saw in the compound interest calculator, how it would just going up and up. That's how I plan to see my portfolio go up in value. One last thing I do want to show you guys about this is if you guys have Seeking Alpha, you can have it to where it emails you on companies that you own on when they declare the dividends, right? So I own shares of JP Morgan's, right? And they declared a dividend of 90 cents, right? This was a 12.5 dividend increase from the prior dividend that they were paying 80 cents. You know, this is what's amazing about owning great companies. They just increased it by 12%, almost 13%, and I didn't do anything. That's like a free raise from work, right? Another one, Honeywell. You know, I got an email about them saying that they're going to give me a 9.8% increase. So they were paying 82 cents. Now they're going to pay 90 cents. Awesome. Another one is Austria. They said that they gave a 5% increase. They were paying 80 cents. Now they're going to pay 84 cents. Again, you know, all I did was hold the shares and I got rewarded for it. Another one is Skyworks Solutions. They were paying 38 cents. Now they're going to pay 44 cents. That was a 15.8 increase. You know, this is what's amazing about owning great companies. And this is how I plan to build out my portfolio. So imagine this in a couple years, you know, this compounds over time. So that is compound interest, and that's how I plan to use it. So let's talk about the next stock market crash, okay? So there's a lot of talk about there's coming a new recession. We don't know when it's happening. People were saying 2019, now it's 2020, but nobody knows. But what I plan to do is, if you guys see $36,000, about $37,000 that I have worth of my portfolio value, I plan to save up about 30 to 40% of that in cash. So right now I'm trying to save that amount, and I'm storing that in a high yield savings account that pays about at least 2% so that my money can stay up with inflation. And whenever that stock market crash happens, great companies will go down 30, 40, 50% on discount, and I'll have that money in cash ready to buy great companies at a discount. So who doesn't love a discount? And so that's how I plan to prepare, and that's why I'm only investing about $200 every 2 weeks. If not, I would be investing a lot more. But, you know, I want to build up that cash, and once I have that, I'm going to start investing more than $200. And, you know, you guys saw the compound calculator. That was $400 a month. But once I have that 30 to 40% value in cash, I'm going to be investing more than those. So it should grow a lot quicker. So by the end of the 35 years, I should have more than $1 million. So the next stock market crash, I plan to have those 30 to 40%. But the other thing as well that's very important is to have an emergency fund. The amount of money that I have in my emergency fund is to be able to live off about 6 to 8 months in case I was to lose my job, or if something wrong was to happen. One thing is that I don't want to, you know, pull money out of this portfolio. That's the last thing I want to do. So, you know, the other thing that I'm trying to do is make sure that I have that emergency fund. You know, that's the first thing I'm going to tap into if worse things happen. And so those are my two things: get a 30 to 40% value of my portfolio in cash, and then just the emergency funds. So that's how I'm preparing for the next recession that will eventually happen. All right, so that was the stock market crash, how I'm preparing for that. Now let's talk about the diversification. And so if you guys look at my M1 Finance pie, right, there's multiple sub pies here. And if I scroll down, there's multiple sub pies here, and I have them broken down into the primary top sectors. You know, some of these don't, like the bye-bye pie or the growth pie. The growth pie here is more of just companies that are very expensive, like per share, like Amazon is almost $2,000 for one share. So, you know, I do want to own equity in it, but I don't have that money. So I'll, you know, buy maybe $20 worth of it 1 week. And eventually it'll add up to one share. That's how I did it for Google. And I finally own at least one share now. So I own 1.3 shares of Google. But that's just my growth stock pie. And then the bye-bye one is more of stocks that I kind of just bought and I plan to sell. So like Tesla. And my other portfolio, I'm very bullish on Tesla. But my other portfolio, I own a lot of equity in Tesla. Here I just had some money that I didn't want to buy stocks at the moment because they were too expensive. And I was like, hey, Tesla went down to like 190-ish. And so I was like, this is a great deal because Tesla's going to jump back up. And it did. So I've already made about $148 or so. And, you know, I'm going to be buying. I'm probably going to end up selling it soon when they report earnings because they're going to probably do very well. But the goal here is that I'm very diversified, and a lot of people would probably think like, hey, well, why don't you just own an ETF? You know, it's a lot less work, right? Well, the reason why I want to own actual stocks, individual stocks. So the reason why I want to own individual stocks is because of what I showed you guys earlier, right? Showed you guys Skyworks, right? They increased almost a 16% on their dividend. Honeywell, 10% almost. JP Morgan, 13%. That's what I get by just owning individual stocks, and over time that's going to increase and continue increasing, and as long as they don't reach the payout ratio. And I'm investing in great companies that I'm very bullish in the long term. So that's why I'm very diversified. If let's say one of the sectors goes down, majority of the time I'm probably going to end up buying more and more on that sector, which actually, I have these set at 15%, 20%, 14%, but I'm overweight on some of these. But it's just because a lot of these other companies have been in the red, and I've been just trying to take advantage and lower my cost basis on some of these. Eventually, I'll get to the point where I'm all in the green almost, and that's where I'll start actually trying to balance this pie correctly. But yeah, I'm just trying to take advantage of all these stocks. And also, the other thing that allows me to do the diversification, I have this Google sheet here that easily allows me to view how many stocks will pay out a certain month. So for the month of October, I know that all these companies here will pay me out, right? So I expect 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 companies will pay me in October. November, you guys can see it's a little bit more populated, so I'm going to get paid more in November, and then as well in December. And so this just keeps me motivated. So let's look at the next thing here. So YouTube. So the way that YouTube falls into this strategy is that I plan to use it to share my journey and get support and get feedback, as well as eventually start gaining income from YouTube and grabbing that income and investing it into my portfolio. And this will allow me to reach that 7-figure mark a lot quicker. So, we'll eventually reach that point, one subscriber at a time. If you guys enjoyed the video, please consider hitting the subscribe button and also the like button. That means a lot, and you're supporting the channel. And hey, if you guys have any other suggested videos, please let me know in the comments. I'll try to get to it and try to make a video for you guys. And I'll see you guys in the next video, where I'll talk to you guys about my weekly update of my M1 finance portfolio. Have a great day. Bye.